the topic which is absolutely energizing, data. Everyone craves it. Everyone wants it. Investors, banks, regulators, everyone is talking about data and that to be, of course, reliable, trusted, available, accessible, transparent, and so forth. So hopefully, we will untangle a couple of those data-related aspects and we'll tell you a little bit about the status and about also upcoming technology use cases and value that the technology brings to the ESG data. So without any further ado, allow me please to introduce a stars-aligned panel, right, for this particular session. So let me first start with Murat. Murat Bozdemir, Head of Product Development for ESG and Climate Risk Enterprise Data Solutions for EMEA and APAC at Bloomberg. And Murat, before I move to the next one, can I ask you, an embarrassing question? Can you say something green about yourself, please?
Something green about myself. Yeah, I think I'm quite good with recycling, especially plastic. I'm almost like autistically focused on at home in making sure that everything goes in the right box. Also, I think more and more in my personal life, I do pay attention at, hey, is this an efficient way of traveling, for example? So I'm try to be very conscious as a citizen. I'm not saying I'm probably not the best example, but I'm doing my best.
Brilliant, many thanks. Marco Tormen, Europe and DACHLI Regional Lead Partnership for Carbon Accounting Financials. Marco, green about yourself?
Yeah, also recycling. I think that's a good thing. I'd also say with my work, so PCAF will not save the world, but with what we do, we are contributing, and yeah, being part of this, I would say yes, that's my contribution.
Many thanks. And now Patricia Pina, Head of Research and Innovation at Clarity AI, and I'll spoil it a bit, because I'll spoil it later, so maybe the first green thing about you.
Does it count to have a daughter who is vegetarian as a contribution?
I think it counts, right? Does it count? Hands up.
Yeah.
Counts?
Okay.
Counts, okay. Granted.
Thank you.
Many thanks, Patricia. And last but not least, José Manuel Marqués Sevillano, and I apologize for my Spanish. I don't speak Spanish. I hope I pronounce it well. Head of Financial Innovation Division at the Bank of Spain. José Manuel, something green about you?
I don't know. Yeah, it was. Thanks a lot. Something green. I think to be more compromised, like Murat, on traveling, on how to move in this kind of city, and also to try to be conscious of my colleagues at the central bank about the importance of climate change.
Many thanks. And my name is Michal. I'm a chair at BRAG, and it will be my pleasure and honor to be your host today. So without any further ado, the topic of data, as we said, is particularly important and relevant to all the key stakeholders. But there is all the stakeholders that are participating in the supply chain. But there's one particular aspect which always comes to my mind when I'm thinking about data. You know, imagine this couple, right, in the evening. There's an evening and they have a bit of a quarrel, a bit of an argument about something, regardless of what. Now, the couple goes quiet. They stop talking to each other, right? But there comes the situation where, let's say the husband, for instance, has an important meeting in the morning and he likes to sleep late. So because they are not speaking with the wife, he basically leaves a small note on the pillow, please wake me up at 7, right? In the morning he wakes up, it's already like 9, so he's almost about to kind of like ask his wife, why haven't you woken me up at 7? And then he sees this small card on the pillow, it's 7 a.m., wake up, right? The format and the way how we transmit data is actually quite relevant. It's either going to be useful or not. So let me ask maybe our panelists first, what are the core, so to say, challenges that you observe? Murat, let me actually start with you. You work with data all the time, and at Bloomberg you pretty much live and breathe data. So what are those core challenges with regards to the ESG data, 3 to 5 that you would point out as the top ones?
I mean, a lot. So I think the ESG data challenge is, it's not completely new, especially not for Bloomberg. I mean, we've been in the space for a while now, in the data space in general. I think there's a big difference between non-financial and financial data. And financial data is much more established. So I think number one challenge with non-financial data and ESG data is initially lack of standards, and at this point, you can even say a lot of different standards that don't always interoperate with each other. We will probably come back to that topic. The other big challenge was initially coverage. Coverage is increasing. The number of companies reporting data will increase. We will talk about regulation, I'm sure, CSRD, IFRS, SSB. But, you know, coverage is not everything, because coverage has to come with quality to have meaningful information. And that's another area where we at Bloomberg are doing a lot of work to normalize the data, to make sure that the data speaks the same language across companies. So it's data quality, it's data coverage quality, it's the usability. In the end, we're not just doing this for fun, we're doing this because we want to help the finance industry to finance, to fund the real economy to transition. So, you know, there are many, many drivers. Regulation is another one. We will hopefully come back to that one. Regulation is a major, major driver, a major demand force at the moment. And regulation isn't always clear at this point what type of data is needed. So there's another sort of almost linguistic issue there to sort of clarify. Do you want me to go on, or you want to just have the...
Coverage, regulation, you said?
Yeah.
And a third one you would pick?
So I would say it's a couple of things. I think it's coverage, quality, usability of information, different jurisdictions, different standards at the moment. You have another layer of, when we talk about data, we typically think about entity level versus, we think about company level data, right? But actually there's another layer of complexity these days, which is product level data. I mean, that's certainly something I want to, talk a little bit more about. But we have Article 689 products, SFTR. I mean, I don't need to explain that to you. There's a wealth of new data coming. So if you look at how many data points there are for an Article 89 product, European ESG template, 586 something data points, almost 600 data points. And we capture the data. And I can guarantee you, if I take two random funds and I compare them to each other in terms of what they're disclosing, you get very different results for similar funds. So fundamentally, regulation is good. We see a lot of positive developments to ease some of these data challenges. It's not the golden bullet, it's not the silver bullet solution. I mean, you need more than just regulation. You need industry, you need actors, adopters, associations, vendors, technology partners to work together to move to a more standardized world. And that's literally happening as we speak.
Many thanks. And Patricia, can I turn to you for a similar one? You deal a lot with processing data and preparing it for some outcomes, decision-making, and so forth. How do you see the core challenges related to ESG data?
Yeah, and definitely a lot of what Murat mentioned, but there is one that I would like to focus, that it's basically kind of going beyond data disclosures and data reporting and really extracting relevant and useful information for decision making. I think that we talk about data reporting, and there is this growing momentum building, which is very needed, don't get me wrong, on CSRD and ISSB disclosing their standards earlier in June, and then IOSCO endorsing them, now national jurisdiction starting to adopt them. And that's great because data is going to be even more available, more comparable, and higher quality, but that's only the beginning of the journey. What we really need is to start to think about how we transform all that information into insights that can drive decision making. And if I take climate and transition plans as an example, we all know this is the year of the transition plans, and we are all talking about transition plans, and some of these regulation and standards will help us also make sure that transition plans are available to us. But I think we need to be talking more and thinking more about how do we actually take those transition plans and really answer the question, does this company has a realistic, credible, time-bound, and really good strategy for remaining profitable as we transition to a low-carbon economy? And it is about using the transition plan for answering those questions that are gonna inform the decision-making and the investment decisions. So I think that's a real challenge that I would like all of us to be working and thinking about, how we actually move from disclosing to using the information in a meaningful way.
Thank you very much. We'll definitely get back to the value for decision making. José Manuel, can I ask you now same question, but also from the context you run financial innovation at the BDE, which is an interesting one because typically the regulators collect a lot of data, so reporting is important. How do you view that and the challenges related?
Yes, yeah, and in the sense as my previous speaker, that is, I think that the main challenge, as Murat was mentioning, at the end of the day is to have something similar that we have with financial data. That is, we need some data that are comparable, that is possible to be extracted from a machine, read, and have the same information for everyone. But this is a long journey to have this one. Now we have several reporting standards, some of them voluntary, some of them compulsory, and you need to deal with all these standards that create a lot of room for different reporting, a lot of room also for some greenwashing and for creating some lack of trust. Then what should we do in this situation, and what should cover this long journey to have a unique standard reporting, credible and easy to compare? This is the main challenge in these days. Then you can work in things that have been discussed in previous sessions, like more on interoperability, of having common standards and having some convergence between voluntary and compulsory reporting. But you also can use, and this is my main area this is one of the areas of work of my department. You also can work on how the technologies and some things that has been mentioned previously can improve and can be able to compare and to use the data and to improve this data. Then I think that there are basically three areas where the new technologies or the technologies could be helpful in order to deal with data. One is to obtain more information, and here we have a whole range of different capacities, from geolocalization data to using satellites in order to check the information, and also using natural process language in order to extract information for different corporate reporting and compare between them. You also can check the quality of the data, and here again you can use the satellite, and you also can use the artificial intelligence like Clarity in order to compare several information and where are the discrepancies, where they came from, and to understand and to audit this information. And you also can look for different ways to distribute and to provide information. And for example, when we create markets with green bonds with different market infrastructure like DLT or things like that, then I think that technology could be helpful in order to make this transition toward having a common standard reporting.
Thank you very much. We'll definitely get back to the voluntary versus mandatory. And Marco, on your side, you are actually developing some frameworks to help standardize and harmonize, especially the carbon emissions for financial institutions. How do you see the core challenges there? You've been working with the financial institutions on those topics.
Yeah, I guess the main issue is for sure data for the client. So what are the emissions of my client, of the loan I'm financing, of the real estate property I'm financing? What are the emissions of the single family home I'm financing in Spain or somewhere in Germany? And so getting that data is for sure the biggest challenge for all type FIs, no matter what, if you are BBVA or if you are a small regional bank somewhere in Eastern Europe. If you're an insurer or if you're an asset manager, everyone is like lacking the same issue. We don't have data. If we have data, and having worked myself before for a bank, I mean, data might still be physically available. Maybe it's in a PDF somewhere where I can find details on the project I'm financing. And so it's also about, okay, how can we make the data we might actually have in our institution, how can we make it meaningful, available for ESG purposes and also to report on this. So it's also kind of like bringing together different departments within the same company. So you have maybe the ESG department who wants to do reporting on it, but the data is coming actually from the business. So it might be coming from your portfolio manager, or it's coming from your underwriter, or it might come from the credit department. So you also have to kind of like involve all the departments within your financial institution. And depending on how you're set up, that can be an easy thing, or it become a very, very complicated thing with, silo thinking all around this. So getting this data might become very, very complex.
Many thanks. So can we actually stay with you for a second and move to the natural kind of like continuation of that, the CSRD and the regulation. Do you think it's going to change the landscape of data availability? You spoke about the need for data and so forth. We've got the SFDR, but some of that data is, as you said, available, for instance, in PDFs on the websites of the firms. Now, would CSRD be in your in your opinion, a bit of a game changer there?
Yes, because I feel that, of course, more and more financial institutions will start to put pressure on the real economy. So it will not be only your bank, but also your asset manager, your investor, and your insurance. Everyone will ask you exactly the same data. So that's the great news, I feel like, for the financial sector. You're all on this in the same boat, because you all are asking exactly the same data from the same companies. So there I feel like there is the value also of collaboration within initiatives such as PCAF, where we bring together basically the whole financial sector, because everyone will need the same data. And of course, there are then data providers who can help you, other players within the market which can help you on this journey individually, but basically everyone has the same need. So there I also feel like, well, collaborate with each other, speak with each other, speak with associations, speak with your regulators in your countries. So as a Spanish bank or a Greece bank, you're not alone in this. You can organize yourself. This is also what we really see within PCAF. So there is a sense of collaboration. I've seen like financial institutions willing to share with each other data sources, even though they might be competitors. So, yeah.
Thanks a lot. José Manuel, can I turn back to you? On the CSRD again, do you think it's going to be a game changer for the banks? You know, so say availability of such data for the banks from green asset ratio perspective or the loan portfolio assessment perspective, does it going to change the game a bit?
I think so, because clearly you focus, as he has mentioned before, that is you focus what are the main areas where you should work in order to produce data, and it's also focus from the investor side, from the customers, where you have to look at. And then definitely, it's a clear orientation that is something real, that is something that you are going to take into account, that this will feed back definitely into stress tests, into other kind of requirements. It's just the beginning of a real standardization. I think that definitely is a big step on this direction.
And Patricia, can I turn to you for a second? You work with AI algorithms, which are typically very good in NLP type of algorithms, which are very good in processing a lot of textual disclosures, and CSRD is a lot about that. Do you see a value in making that information actionable, in driving some value for the decision making?
So definitely, and technology, I think, can help us a lot in making sure, and as we were discussing, making sure we have quality data, high quality data at a scale, so that we can do that for many companies. And we are talking about CSRD. So actually, 50,000 companies are gonna be affected by CSRD. So that's a big number. And that's important, and that's where we use NLP, natural language processing, for actually extracting that information. So the first thing you need to do is to actually extract it, but then you need to process it and to turn it into insights and into relevant information for decision making. And that's where we need to work with regulation, and in that part, for example, not only CSRD that is going to make data available, but other regulations we have seen in Europe, for example, EU taxonomy. It's important because EU taxonomy is creating a language defining terms that we were all using, but we were all using with different definitions and we were not understanding each other. So we need this dictionary, and this is even important for us because these algorithms need to be trained. We need to teach them what is sustainable, what is not, what they need to find, how they need to process the information. So it is in that context that all these regulation and frameworks are also helping us advancing the agenda that we all have, having the data that we can use for decision making and leveraging technology in that journey.
Many thanks. And may I ask you on the data side, Murat, how, in your opinion, ESAP, the introduction of the European Single Access Point, because the CSRD data is going to be collected using inline XBRL, the same as ESAP, the European Single Electronic Format, and that's going to be made available via this ESAP platform. Yeah. How does this change the game for you, introductions of such European EDGAR database, if I will?
Yeah, just before I go there, just want to comment also on CSRD, if I might. I think in our journey as Bloomberg, if we collectively, if you look at, we have CSRD Europe, 50,000 companies, there are other regimes, other proposals. So we're looking at about 75,000 companies globally where there will be mandatory information. So we invested heavily in people and technology. The interesting thing is, you can't just solve this with people, and you can't just solve this with technology. And the reason why I'm saying is, I think one thing I want to make clear about CSRD is CSRD, 80% of the requirements are still qualitative in nature. So I think Patricia made a very excellent point about usability. It is just collecting data and pumping data around is not necessarily going to help you in usability. TCFD is around, again, same story, huge, big chunks of TCFD reporting is qualitative in nature. So that usability story is something we're also heavily trying to invest in. And then this automatically sort of connects to your question about ESAP. So ESAP, I think, I think it's hugely, hugely important. In one of the previous sessions, it was mentioned that in Europe, we are very dependent on bank financing. We have a fragmented capital market. We're very fragmented, heavily dependent on bank financing. SMEs, especially SMEs, are suffering from this. And we saw this during the last financial crisis where they could not get a funding because the banks had a huge problem. So that whole market and the whole economy, I mean, we're at the brink of a huge crisis. So one of the goals with ESAP is to expose more, in a standardized way, more company-level information and product-level information. It's hugely important. As Bloomberg, we responded to this initiative in a very positive way. It's going to make our life also easier. 80% of the industry, all of you, spend time in finding the data, maybe even 90% if you have a banking book. That's wrong. It should be the other way. You should spend time in doing the analytics and making the right decisions and generating alpha for your clients. You shouldn't be bothered about the quality and the coverage of the data. You should be bothered about, you should have confidence that the data is usable. So is ESAP, again, the golden solution? It will be a massive step forward, but it's, again, you will have reported data sitting in the database. You still need to normalize it. You still need to think about using the data, and you still need to think about connecting the data with other data sets, using technology, machine learning, GPT-type technology to connect it with asset data, facilities data. What is the impact on my portfolio from a net zero perspective? What is the impact from a supply chain perspective? These are very difficult questions to answer, but at least with ESAP, we are going to make a jump forward. It will take some time, spending less time on getting the data and spending more time in analyzing and think about usability.
Many thanks for that. We'll get back to, hopefully, if time permits, to ESAP and the NZDPU, the more global platform. But I would like to turn now to José Manuel. Let's move a little bit away from the regulatory data for a second, because you work in the financial innovation. How do you see the role, the use of ESG data for financial institutions outside of the regulatory realm? Can they actually benefit from use of the data for their own internal models, business models, enhance and provide some new products or services related to that?
Yes, this is the final target. That is not only to comply, because you have to comply, is because you really want that the financial institutions use this, not only to transform their own decisions, but also in the case of financial institutions, to help their customers in order to understand how they need to transform in order to take into account this risk that is associated with the climate change. And to do that, as has been mentioned previously, you need to know how to use this data, how to make this usable to your customers, how to can internalize this in the decision of your customers and to translate them to their final decisions. And yes, you should work on analytics. I will go to the last point, that is to have this in a more standardized way is clearly the great milestone when you can begin to work with that. But in the meantime, is the more difficult, because to have this ESAP, we need at least 4 years. We should not wait until this point. And at this point, you have a myriad of data from different sources, and to survive during this period and not missing trust and credibility with your customers, that you should do something. And in this meantime, you should work with algorithms, trying with different kind of data, compare these ones, try to transform this complexity on the data that we are going to have for some years until we have a clear, standardized way, in order to make them to be able to take real decisions. I think that this is the most difficult. Once that we will have standardized data, everything will be much more easier. Still, you need to adapt the data that you have to your real needs, but it will be much more easier. But this period that is not going to be a short period, you need to have technology, you need to have algorithms, you need to have things in order to be able to extrapolate all this data, to take the real information and to take apart all the noise that you have in the data.
Well, can I stay with you for a second? Because in my mind, going back to 2008, 2009, when we digitized CRD4 across Europe, actually a little bit later than that, but efforts started early on with CBS. And I have to admit, I haven't really seen the banks internalizing the digital CRD4, so to say, models, dictionaries, the regulatory reporting definitions inside their organizations. Do you think that we can expect the banks to actually internalize the sets of definitions, the classifications that are provided through the CSRD and through the EU taxonomy?
I'm not sure. This is not real a part of my expertise, but I guess that it's a bit different. That is the CRD4 and all these prudential and regulatory requirements is something that is, in some sense, constantly evolving. Once after every kind of financial crisis, and we're creating new and new standards of reporting, and maybe from the financial institution there is a sense, okay, we have to see where this will end. We have to see how this will finalize. There is a lot of discussion in order to have this international coordination. In the case of climate change, it's completely different. That this is definitely new data that we are not used to deal with that, and this is completely new data that you need to face with this one. And they are not used to deal with information. They know that these kind of requirements are going to stay forever in order to transform the economy, and they recognize that there is a long journey in order to have something stable. Then I think that they have clear that if they do not take this into account really and then internalize it, you are going to lose part of your competitive position in the sector.
Many thanks. Marco, can I turn to you? Have you observed any examples where credit institutions have benefited from, internally for risk management purposes or other purposes, or creating new products or services from these regulatory efforts or from the ESG definitions or from your standards?
It's a good question. Well, I would argue, kind of like you have those financial institutions which run ahead, kind of like which are they are ahead of the pack, and there definitely I would assume yes, we can see products coming, services coming, and then we have a vast majority of financial institutions which is basically looking what the others are doing, and we can see that the PCAF. So quite often you can see like in countries if one FI is joining, especially if it's the large one, the others are following. So you can definitely see kind of like, I guess it really needs the trendsetters. And I think basically that's the history of PCAF. I mean, PCAF was developed from financial institutions in the sustainable area. So the FMOs, the Volksbank in the Netherlands, all these very sustainable financial institutions, they started this. And by now PCAF is, it is at the heart of the financial center. It has become mainstream, I would say. And so I think the same goes with financial products. Yes, someone is starting like with a green mortgage or I don't know, anything else. And if you can see this is picked up by clients, everyone else will follow this. So I think it's part of the transition.
The boards as well? The risk management?
I think there is then also a regulatory can come in. I mean, it's again like, of course, you have the trendsetters or the ones which start the whole movement. And kind of like if you want to move everyone, I think this is where regulation can be valuable because it sets the same playing field for everyone. I mean, that's, in my view, one of the big advantages of regulation. I know regulation is a bad thing for the financial sector. But again, I feel like it brings everyone down to the same playing field. So it's not like we as like trendsetters and do I have to feel like I lose business because I don't do a specific business anymore, everyone else is still doing it. Coal underwriting, I think, is a good example. I mean, one insurance started to, we are not underwriting coal anymore. And by now, I think in Europe, it will be very difficult to find an insurance company which is underwriting coal. So kind of like it started with one, everyone else is following. and it was not even because of regulation, but I think in other topics, yes, regulation can really make everyone equal again.
I think one keynote earlier today was talking about this kind of like social aspect and the fact that it's ahead of regulation, that the regulation very often lags behind these social trends and whether the financial institutions will pick it up. Well, I think I agree with you on that. I would love to observe the boards actually take it up as part of their agenda and part of their topics. I see that some of that is happening, but...
Not yet with everyone.
Thank you very much. Patricia, can I turn to you for a second? Can we use technology to bring such value to the stakeholders? You are an engineer by education. I'm going to spoil it, but actually aeronautics.
I am, yes.
Right? Which was a shock to me when I read the bio, and I was just like, okay, aeronautics, engineer, what do I ask you? How did you, just a side comment, how did you get from there to ESG?
It has been a long journey. I guess, so actually I am by training aeronautical engineer and I work as an aeronautical engineer for a few years, and I even went to the US and get a graduate degree from MIT in aeronautics. So yes, there is a previous life of mine. I guess at that point I also got involved in more development, international development related, and more from the appropriate technology at the beginning. Then I transitioned into measurement, data, evaluating impact. So now it starts to get closer to sustainability, data, and what I'm doing now. So it's been a journey. I definitely enjoy a lot my work as an aeronautical engineer, but then I discovered something else that I also enjoy and I'm passionate about, and here I am today.
And can I stay with you for a second on this particularly frontier technologies, because they seem to bridge the gap. For instance, I may not be an expert on ESG data, but if I'm given an appropriate interface, such as an NLP-enabled chatbot or something like that, I can actually ask in natural language my questions and kind of have a conversation leading me to the right data set. Have you implemented those kind of things at Clarity AI?
Yeah, and actually, whenever I talk about Clarity AI, I start saying we are a technology company, so we are not a data provider, we are into the business of providing a technology platform so that clients can actually start to measure sustainability. So it's pretty much along those lines. We provide capabilities and we enable clients so that they can start on that journey. And also we often say, well, there are 3 layers: the data, you need the data, then you need the methodologies, and then you need the tools, the interface. So we, of course, in order to actually use the data to make decisions, you need the 3 layers, and then we work in those 3 layers. But yeah, the tools is an important piece of that journey. And I think technology definitely is important in there. I will also say something else. I think that I often say, when we talk about data, I think traditionally this industry has relied and is still relying a lot on self-reported data by companies, and that's great because they have more insight, they have more granular data. I mean, there is a lot we can learn from the data they are reporting, but I think it is time that we start to think about bringing other data sets to the table, and technology can help with that. So for example, satellite technology, it has been mentioned in here. Clarity AI, we've been actually partnering with Climate Trace from the US, that they actually use satellite technology to create asset-level inventory on greenhouse emissions. So they estimate emissions at physical asset level using satellite data, estimating activity levels and emission factors. And again, you can use that to start to understand maybe what this company is reporting or what this company is not reporting. So we are following on that. So when you report on emissions, you have reporting accounting approaches. Some companies, most of the companies use control. That means that often companies are not reporting the emissions like their investment, the share of ownership they have on certain assets that they don't control. Maybe as an investor or as a bank, you are worried about that also because they have a share on that. They have some emissions that they own from those assets, and maybe you want more visibility on that. And satellite maybe can help you. That's just an example to say that I think technology can help in many different dimensions.
Many thanks. And Murat, would you agree with that? Would you agree that technology is soon, and perhaps you could cast away, because maybe that's a trivial question, the technology will help, but actually if you could, cast a little bit forward your mind and say in what way we can observe the evolution of these data, the ESG space, and the use of technology, and particularly the combination of those two, in what way can it help us as stakeholders?
No, absolutely, 100% agree. I think technology is key, absolutely, in many, many areas. And it is from different perspectives, right? I mean, there's supply and demand. So supply meaning literally a data vendor and technology, solution provider, and there are many of them. They give you the data, they give you the technology solutions, because just reported data, I fully agree, is not enough. I mean, we know carbon space, GSG, they're only like, I think scope 3 is still around 5,000 companies or so, something global. And then if you look at the quality of scope 3, there's serious doubts. I think ECB, in one of their reports, where it was last year, they looked at scope 3, reported numbers by different banks, and the variability, literally, they saw same companies, exposure types with a factor 10,000 difference in terms of carbon footprint. So clearly, there is a big problem there. So reported data alone is not sufficient. Technology has an important role to play, both, again, from supply and demand. And what I mean with that is, for us as Bloomberg, as a data vendor and technology company, we are investing heavily in NLP and natural language processing and AI and other technology to cope with that big universe of new data coming in and making the data usable, normalizing the data, and going beyond in terms of estimates where there's no data, because not every company is going to report. And from a due diligence perspective, you don't blindly just want to rely on reported data, again, for all the reasons mentioned, and ECB also flagged, because sometimes these reported numbers can be very, very out of whack. Just want to say one thing, for example, SFDR, PAI, a lot of the buy side here, you mandatory are reporting the PAIs. If you take random 5 asset managers and compare their PAIs, you will see very different numbers. The main reason will probably be because they have different portfolios, but even if you normalize portfolios, the reason is they use different vendors, they use different estimates. SFDR requires you to estimate even if there's no reported data. And since there is no consensus in how estimates have to happen, you will get different results. So that's where we are, and it is the journey. I think we're making huge progress, and technology is going to help us in terms of making that progress. CSRD is going to put more pressure in the estimate you use. If anyone in this room thinks I can get away with any estimate and I'm done, I think you're making a big mistake, and you set attention board level, they will wake up very, very soon, because you will get a fine. Why? Because your auditor has to sign off, and if your auditor doesn't sign off your non-financial disclosure in the future, your shareholders are not going to be happy, right? Typically, that's how the audit goes. So CSRD is going to require an audit. EU Green Standard Bond will be audited. So the time of just some simple sustainable debt with the fake use of proceeds, those times will be over, right? You need to have confidence in what you're using, both reported estimates, you need to understand what you're doing. Very similar to where banks were just before the financial crisis. If you remember, a lot of banks still using internal models, right? I mean, for capital purposes. In my previous life, I was doing a lot of credit risk modeling, actually. And I think there was a wake-up call again, like the quality of some of these models. I think, so lengthy answer, but the answer is really technology is key. Key for coping with the supply of new information coming in, connecting the dots, creating useful information, but at the same time, there will be more pressure, I think, from greenwashing concerns, from all kind of valid concerns to make sure the quality is always there. We can't just blindly use everything out there, because then we're going to run into huge problems.
Well, you actually naturally led me to my next question, which is simply, how do we ensure quality? In accounting, we do have those rules. Assets should equal equity plus liability, and more, of course, and we can compare the data. But I know of a regulator, a few years ago, who actually collected data on cash flows, and it so happened that a company submitted the same cash flow 3 years in a row, and it was all accepted.
Yeah.
Right? So how do we ensure that the data is of appropriate quality on the not only CSRD level but SFDR? It's PDF in many cases. So
I think it's a very good question, and unfortunately, I won't have the full answer, because I think it's going to be discovery. And quality will mean different things for different people. So for us as a data vendor, quality, for example, means simply at the source, when we look at data, we don't just grab everything out there, because then we would just we'd be garbage in, garbage out for you guys. So one rule we have is that the company should at least represent 80% of their activities. Otherwise, because we see a lot of companies disclosing information, but just cherry-picking their developed markets activities, which gives you a false sense of figures. Another piece is, for example, if you see all of a sudden big jumps, anything, right? Reported data or estimates, if things move around rapidly, that's not useful. That's not usable anymore, right? Too much volatility. I can see, I mean, a lot of this is developing, methodologies are developing, but there is a fundamental problem. And that problem is that if you look at disclosed data today, if I would say how much is being restated, the percentage of companies restating their non-financial disclosures, I mean, that in itself is a big problem. So if you then do derived work on that one, if you don't control for quality, you're going to build, you're going to make huge mistakes. And this goes through the whole value chain. All these Article 9 sustainable funds who passively track PABs. And these PABs rely on certain reported data or certain estimated data. But if that data is not stable, whether it's estimated, how it's estimated is not even the problem. But if it's being restated and not stable, then you create sort of uncertainty. So I think we will learn. I think we need to agree more what quality is. I think the auditors are now, on the IFRS side, the auditors have a huge problem. They have defined ISSA 5000, which is a standard for IFRS. I think on the European side, EFRAG side, they will also think about standards. But this will put a lot of pressure on auditors, but also on board members to think about, hey, what is acceptable? And in the beginning, I can see you give more leeway, like the regulators now, I think, we're giving lack of data or standards, with the SFTR and the PAIs, or even in taxonomy, where there are still issues, even on the reported side, the quality side, we see the numbers coming in, and it's not just you take blindly, again, if you would open up and just take all the numbers as an investor, you would probably have a problem, because we know from experience that some of these numbers, the interpretation is not correct. The regulation is complex, it is novel, we're learning as we're doing it. And that means that, we all have to be pay a lot of attention to these sort of learning problems almost, like linguistic, like we need to define the language and agree what is the right way forward here.
Many thanks. Marco, on PCAF, do you help the banks, or do you in any way provide some layers in order to ensure the quality of the data?
Yes, so within the standard, PCAF defined 5 data quality scores, score 1 to 5. 1 would be best data quality, basically data from your client, externally verified, down to 5, which is an estimation based on economic activities. So, for instance, the revenue of the client. So it is not mandatory to include data quality in the disclosure, but it is strongly recommended by the standard. So we see more and more disclosures do include that type of information. I know not everyone is doing it yet. So yeah, this is definitely something which is helping to create additional transparency towards external stakeholders, so that they know with what type of data has the GHG emissions been calculated with. And we know from discussions also with data providers, financial institutions are asking for that type of information. So I think, you have it, other data providers have it in there as well. They are aligning their data sets with the PCAF data quality scores. So that's something which can help creating transparency. And what we strongly encourage is be transparent about what you're doing. So if you deviate from the existing standard, explain what you did. Really, basically, like at university. If you're not sure, make an assumption, note it down. So this helps, of course, creating transparency. Of course, this might also then be, again, have to be like process, kind of like to know what people are doing. But yeah, I think that's one way how you can do it. It will not solve the issue. But of course, and part of the journey should, of course, also be thinking about how can we improve data quality. So how can I move from estimations to reported data from my clients?
And José Manuel, as a regulator, how much, so to say, are you thinking about the data quality aspect on the ESG data? Are you working with the financial institutions in order to improve that, or provide any frameworks on that, or have any expectations there?
Well, from our side, that is, I'm not in the part of regulation, I'm part in the part of developing new initiatives based on technology. Then one thing that we are doing, obviously this is a problem, a general problem for most of the countries, most of the central banks, and we are working in very collaborative frameworks, and here the BIS, the Bank of International Settlements, is taking a big role in order to coordinate efforts in using the technology in several jurisdictions in order to help other central banks how to deal with this information, how to have this information, and also how to not help the financial sector, but assess them and how to evaluate the information that the financial institutions are providing. And what is more important to know, several initiatives, because that is, as I mentioned at the beginning, there are problems with several sources of information, then you need to be able to compare this one. There is also a problem in obtaining more information, and here things like the satellites could improve a lot, and there are other sources, but could improve a lot and could be helpful in order to check the validity of the information. But I think that one area that is also crucial, the technology, and that we also need to look into ways how to perform, is how to improve, is how to translate all this information into financial implication, into risk assessment, into real numbers in order to take decisions. I think this is very complex. This is not easy. That you have several scenarios. That is to say, okay, this is a climate change scenario. What is the impact of this one on my business model, and what is the implications? There is a common framework for central banks and for financial institutions. All the work with stress tests and things like that, and different models, and all the work with digital twins in order to understand what are the implications for each institution. I think that here is a clear way forward where we can collaborate a lot with the private sector. And basically, the other way that we try to help, and in this international collaboration, is by bringing several initiatives in several regions, like Clarity AI or other providers that use the technology in order to help in different solutions and to spread and to be able to other central banks in other regions to know these kind of solutions, because most of these solutions are from small niche or from small areas, and it's very difficult for them to escalate. Then our role in this area is to coordinate with other central banks, with other regions, other countries, in order to say, okay, this is a common problem. We have this company that is creating this possibility. You can leverage on this. You can open other markets. And this is the kind of cooperation that we can do with the private sector.
Thank you very much. Before we open the floor to questions, so please prepare. Patricia, last question to you, a little bit actually linking to what José Manuel said. Perhaps we are thinking too much about collecting data, especially when it comes to supply chain data from SMEs, right? They aren't ready to actually make an effort to prepare that data, don't have expertise in that field, costly to purchase software or services to support that. Do you see technology working in the space to actually maybe replace the traditional data collection and declaration from the companies, perhaps, I don't know, sourcing some raw data and transforming it somehow?
So technology can also help the traditional reporting of those companies and kind of making sure we have easier processes and tools that can make it more accessible. So I think it can work in both ways. And there is a challenge that I also wanted to mention when it comes to data, that is the data gap that exists between the global north and the global south, which is a little bit related to supply chains, because the reality is that like most companies in the global north have their supply chains in the global south. So if we want global north companies to make progress and to achieve all these commitments that we have made, they are going to have to work together with companies in the global south to make progress and to advance. And actually, there is less data. Fewer companies report data in the global south, and when they report, they also report fewer number of relevant metrics and data points. And actually, we have been looking into that and quantify on climate. For example, we were talking about climate as being one of key topics for all of us here. So actually, in absolute terms, like companies in the Global South report 30–40% less than companies in the Global North. So the gap is significant, and when you control for potential confounding factors, such as like the sectoral mix or the size of the companies or the regulatory framework, so you still have that effect. There is still a gap. So it's not because there are different sectoral components or the size of the companies is different, like there is that issue. And we need to work in multiple lines. There is a piece on these standards we are talking about, really thinking about how they are implementable and usable in the Global South and how they can help address this issue. There is a piece on the tools that we were talking about and the process. And I think there is also a piece on technology, on the estimation and the models that Murat was referring to before. We can start to use these modeling techniques and this estimate to get an idea of what might be happening there, even if we don't have data yet, while we work to have more data. And also transparency, when we use estimates and models, transparency is key, and I fully agree with that. Transparency on assumptions, on confidence level, on all those things, so that you understand what data you are using and what you can use it for.
Thank you very much. We still have a few minutes for questions, so maybe Mustafa, if you could help me out opening it up to the audience.
Hello, so I'm Amandine from WWF. I have a question more on actually biodiversity, because I think the panel you've been focusing a lot on climate data, but biodiversity is like the next topic. And in this, I will have a question on more particularly the importance of asset level data, because for biodiversity, we know that you need to know where basically company operations are happening versus climate. And if there is any thought on the importance of asset level data, and maybe from Bloomberg, like do you work on that? Because those data are very costly usually and not very, let's say it's hard to get all of the data. So that would be very, interesting for me to hear.
Yeah, absolutely. A very good question. I think biodiversity is absolutely the next big thing TNFD discussed. So at Bloomberg, we are investing heavily in biodiversity, like probably the other vendors and technology, out there. But so for us, there are a couple of key ingredients here. Step one is, you mentioned asset data. So we do actually we collect asset data. We know of companies. We try to, look at transcripts, at other sources, alternative sources to make up. We have more than 1 million data points in terms of where it comes to asset data and the quality of assets, what type of asset. This data is very important, not just for biodiversity, actually also from a climate, for physical risk perspective. We've done a lot on the physical risk sense. So asset data, I would say every one of the tier 1 banks, larger banks typically need this data, full stop. They will need it. Not just the public and private companies I cover, but for all of your SME and other type of exposures. Huge challenge, but you need it. But biodiversity is particularly challenging. There are different approaches, but you do need to understand, you need the geolocation engine, which we have. I'm not promoting Bloomberg here, but yeah, you need geolocation engine. You need to understand exactly where those assets are, what type of assets. And then you're not there, right? I mean, the most important ingredient then is you need an understanding of what are biodiverse sensitive areas. Is it a degraded area? I mean, I live in London and we have something called the Green Belt. It's green on paper, but it's definitely not biodiverse. So you need to do a little bit more analysis, but that's definitely something we want to invest in. We're investing in to come up with to use technology, but also to use asset level data, geolocation engines to come up with which companies, giving their activities, giving their assets, are they operating in biodiverse sensitive areas? Are they potentially doing harm? This is a typical area where if you wait for reported data, you can wait for a very long time, even with CSRD. I mean, materiality, I don't think a lot of companies are voluntarily going to admit or just going to put on paper that they are doing in some form harm, because a lot of these activities might not be material from a dollar perspective, but are very relevant, I think, for investors who are trying to build some, biodiverse sensitive portfolios.
Thank you very much. Any other question from the audience? I see none, so allow me please to perhaps wrap up the panel. So I think to conclude, I would say that maybe starting from José Manuel's side, Regulators, I think, are thinking outside of the box a little bit in the context of the ESG data. They don't only rely on the CRD as one of the source of data, but they actually are thinking about all the other sources which are available, particularly from the inclusion perspective, so the geodata, but also the data that various companies provide. On the technology side, there is still a gap on the data side, but the technology can definitely help and fill that in. So can definitely help and provide certain value-added aspects, but also provide quality assurance on the data collected and on the data produced by the different entities, as well as bring those interfaces which actually bridge a little bit the gap for use of that data. And once it comes to the data, definitely the importance is on the collaboration with the entities and actually building on the sets of standards which have been already factored in the business models and have been already built into the fabric of the financial institutions. So it would be important to understand that there is a range of those developments which perhaps may lead us, may shorten the cycle to achieve greater availability and transparency and trust in the ESG data as a whole. And last but not least, on the responsibility side, the boards need to get involved. The investors need to absolutely take that as part of their journey, and the importance of them being responsible for the decisions and basing on the data sets is absolutely a must for them. So with that, if you permit, I would like to thank very much my esteemed panelists, and thank you very much to you for listening to us post-lunch. It is a great achievement that we kept you in the room. Thank you.